Palantir, a meme tech stock that does stuff. This guy is Alex Karp, the CEO. Let's look at what Palantir does before we get into how it's going to perform. Palantir has three main arms: Gotham, Foundry, and Apollo. Gotham is an AI-driven, machine learning, decision-making data aggregator that is super secure and helps fight crime. It is mostly used by government agencies like the DOJ, DOD, and probably some others. It has some sort of military application that I don't really understand, and it might be the future Skynet. It's totally not related to Batman. Moving on to Foundry. 1, it has a really cool name. 2, it's designed for corporate clients that totally don't want to spy on us. Fun fact, after I started talking about making this video, I started getting ads for Palantir and their services. I don't know why I'd want them, but they offered them to me. Like Gotham, Foundry is a super secure machine learning AI that lives in the cloud and helps you make better decisions. Unlike Gotham, Foundry is geared towards corporate clients. Oh, Apollo, what are you? What do you do? Please be less complicated than Gotham and Foundry. Apollo is autonomous AI fleet-wide integration that auto-scales to improve workflow with uncompromising security and unparalleled flexibility. Pulled that right from their website, so you know it's true. There have just been entirely too many buzzwords used here, and that's how they describe all of their products. Took me a while to figure it out, but Apollo just delivers Gotham and Foundry to people. How does Palantir look by the numbers? Well, by the look of that chart, it's terrible. PE is really high at 65, EPS is trash, revenue growth is great, and currently the market cap is at 25 billion. Enterprise value over sales is poor at almost 15. You really want to see it under 3. It's priced at 9 times book value, so value investors beware. Finally, income per employee is negative, and not just a little negative, it's rough. The future for this company is unclear. Revenue growth is expected to increase in the coming years, but the next earnings is expected to be poor. One thing does seem certain, however, and that is more share dilution. Thank you, Alex Karp. Constantly compensating your employees with stock option and warrants is sure to help the retail consumer. I just can't wait to see how this goes. Palantir has more than doubled the shares outstanding in the past 2 years, which is not a great sign. I expect dilution to slow, but I'm not going to hold my breath. It's not a buy for me, but it is tradable. It's got meme status, which helps that. Dilution and rapidly rising expenses are simply not what I look for in long positions. I'm not opposed to selling some condors going into earnings, as it does have meme-priced options. There's like 30 more seconds of bear footage just to drive the point home. Why don't you check out either of these other videos, or, say something in the comments. YouTube seems to like that. Bye!